Hey everyone, this is Mason over at the Kendall Report. Before I start today's video, I wanted to ask anyone in the community who has specific questions about our indicators to leave them in the comments section or email us at info@kendallreport.com. I will work with Bob directly to get the answers to you in a video. As you know, our summer sale is coming to a close at the end of the month, so I wanted to do a quick summary of one of Bob's primary tools for trading, which is of course the market grid. The market grid is a powerful indicator that helps traders identify key levels of support and resistance on a chart. Think of it as a roadmap for understanding where the price of an asset might go next. Here's how it works in simple terms. The market grid is designed to show you projected price ranges for the next period, be it a minute, hour, day, etc. It plots levels on your chart that indicate where the price is likely to find a support, a floor, or resistance, a ceiling. These levels are based on historical price data and statistical calculations, which Bob fine-tuned over decades. So here's how it works. The market grid projects three main levels above and below the current price: R1, R2, and R3. These are, of course, the resistance levels, and S1, S2, S3 for support levels. These levels are calculated based on the average range of the last few bars, typically 3, and adjusted for volatility. When the market becomes volatile, the ranges expand, and when it's calmer, they contract. This helps you see at a glance how aggressive or conservative your trading strategy should be. So in summary, the market grid gives you a clear framework for where to expect price reversals or continuations. Next, I'm going to play a preview of Bob's course on the market grid, which is included in the complete package. Enjoy.
Let's start by going to indicators, the invite-only scripts, and let's put the WaveTech market grid on the screen. When it comes up, an orange range, which is the extreme, and then you'll see blue cyan dots and red dots, which are the resistance levels. On the right-hand side, I have this indicator turned on so it would display the values on the right-hand side in the price range. So you can see the last trade is a real-time S&P futures chart. Then you'll see the purples are the resistance and the cyan are the resistance. So you can see exactly how it's trading just on the screen. It's trading right below S1 right now, and so you can see where it's positioned based on how everything's unfolding here. But it's taking that 3-bar consideration and it's putting a range. And I just want you to just look at this screen and notice that for the most part, we do not exceed the low values or the high values of this range projection. And you'll see when volatility increases, the range gets bigger and it comes back in. So let's talk about a couple events that are significant. And the SXT, and a lot of times I call it STX because on the old indicator it was STX, that if we get a close below this value, which occurred right here, that's considered to be a STX buy signal. And it suggests that at least the next few bars will be sideways. And in this case, we did get a sequence to the upside. Here was another buy right over here and a sequence to the upside unfolded. I don't see any STXs. The inverse happens if we get a close above the RTX level. You get a close above that, then you're going to see some sideways. We don't have any closes on the screen. This one was fairly close, but it looks like it was right on it. But the bottom line is those are extreme events. When that happens, the markets tend to reverse. They don't have to. Sometimes they'll get multiple versions in a row, but intraday, they really don't get those. If we were to bring up a daily chart, you'll see that these RTX sell signals, STX buy signals only happen about 12% of the time. So 90% of the time, the markets are going to stay within these ranges. Let's go to the settings, and you go to the wheel on settings. I just want to show you some of the inputs here. And right now it's set on a length of 3. I believe you can go up to 200 here. I'm just going to put 200 here. And you might be able to even go higher, but I'll go to 200 and you'll see that the range changes. So that's a 200-day volatility range that you're seeing here. And I don't suggest to use that. You can change this somewhere between a 3 and 5 range is what I would suggest. So let's put this back to the level of 3. And this is a typical volatility. This works best. It's what I use 90% of the time. I very seldom change this. And this is really the best. And all this is expected to do for you, especially if you're day trading and you're trying to find directional movement. You can get locations here. Like I said, this in use with the PPMs. The PPMs are one of the primary indicators that are used in a lot of the techniques that I do. But for this, you could just trade off of this, and I'm going to show you the WaveTech Webs, which will give you even better recognition here. This gives you some good pattern recognition. It also gives you expectations of how the bars are going to change. This is the basic setup for the WaveTech Market Grid.
If you enjoyed Bob's video and found it informative, click the link below to take advantage of the summer sale today. This offer won't last long, so don't miss out on this incredible deal. Thanks for watching, and as always, happy trading.